Are you tired of sitting on the sidelines while others are making millions in the world of cryptocurrency? Well, wake up. It's time to stop gambling your life away at the crypto casino and make some massive, professional, skill-based gains. Welcome to the Cryptocurrency Investing Campus, where I, Professor Adam, transform you into an actual investing professional by equipping you with the most cutting-edge and advanced skills exclusive to the real world only. Trend probability modeling. Stay one step ahead of the game as we stack the odds high in our favor. Learn how to spot trends before they explode in both the up and down directions. Strategic Omega Modern Portfolio Theory. Modern Portfolio Theory is the bank's best kept secret for portfolio management. I've brought it into our world and made it 100 times better. This is one of the greatest portfolio management techniques ever created. Last but not least, full cycle valuation. Learn the art of valuing the entire crypto market from start to finish. Develop an eye for understanding where we are and cash in on rare value opportunities. Hear from my successful students who've transformed their lives using these very skills. They're no different to you, but they've changed their lives with my methods. The market is becoming more competitive by the day. Act now and build world-class investing systems in the most practical university on earth. So if you're ready to take control of your wealth by embracing the modern, the cutting edge, the world's class, then join the Crypto Investing Campus today. The future of your portfolio is in your hands. Good morning. Welcome to another episode of Investing Analysis. So, public service announcement, first things first. I just wanted to say a big thank you out to all of the students who graciously adapted to the retirement, the temporary retirement of the RSPS at this phase of the market cycle, because personally, don't have any money really allocated to it previously, and I just decided that it wouldn't be worth my time going through it and managing it, especially when my brain power wasn't being fully allocated to it. I believe that the posts that I put in the RSPS channel are descriptive enough and they fully cover all the different dimensions of the questions that you may have and the rationale behind why I made this decision. So for me, 100% in the SDCA portfolio, but of course, the small cap part of that portfolio is also being actively managed. Some of them gently are being moved between cash and the actual positions. Some of them within those individual slots are being rotated between multiple assets. The level 4 grads will understand completely, of course, but that's a discussion for something completely different. So without further ado, let's just get straight on with the investing analysis, shall we? So first things first, we have the TPI, and you'll notice there's actually a positive rate of change on the long-term TPI here, which is fantastic. It was one of the components that just barely flipped short as this decline was happening, flipped long again. So I'm quite happy with that. No signs of strength at the moment with the medium-term TPI. So for the moment, that's going to be still short biased. I'm not too stressed out about that because as we will go through and as previous investing analyses have discussed, there really is very few reasons to be scared. And again, I will mention this again because this is something that I covered yesterday. Every investing analysis video builds upon the previous videos and they are all relevant. Do not come here and watch a single fucking video once a week and be like, oh, that's enough. Now I've got like a little insight into what's happening in the market. Everything is changing all the time. You may even go as far to say that once this video is released, then all of its content is no longer relevant because you're 1 minute late to watching the video. But that's an extreme interpretation of it, of course. Its relevance declines over time, but all of the previous investing analyses and their maturity in their evolving kind of state through time teaches you a lot about what my approach is and what is relevant and what isn't. So what we'll do is we'll go from that into probably the most interesting and relevant piece of information today, because I always like to start off with the most relevant things first. And we have this new lead-off morning note from 42 Macro. Now, the headline kind of point on this 42 Macro note was the December PCE report offered strong support for our resilient US economy theme, and the immaculate disinflation theme underpinned the Goldilocks. Yes. Elsewhere, Beijing signaled more targeted stimulus via low-cost PBOC funding to specific sectors of the economy. It is clear restoring confidence among investors is core to the Chinese Communist Party's agenda, so investors should continue to expect a front-loading of stimulus in early 2024, which our research accurately presaged in December. So if we go back down to this, you will see where else it says. So talking a lot about data releases. Elsewhere, Beijing signaled more targeted stimulus via the low-cost PBOC funding. It comes after Wednesday's surprise 50 bips reverse repo reserves, something. I don't know, forget what that acronym stands for, which Governor Pan Gongsheng confirmed 2 reports weeks in advance. The giddy announcement followed Premier Li Qiang's front running of the official GDP stats. It is clear restoring, yes, confident is good. Right. So the key takeaway here is we believe commodities are setting up for a bull run. Now, whether or not you classify Bitcoin as a commodity or a fucking stock, or whether you just call it a cryptocurrency, it's all the same shit. If there is more money being sent into the economy via these pathways, then it is probably going to be stimulatory for the cryptocurrency market. Why do you think this candle here shot up like it did? This is probably very, very relevant to, where is it? It's probably relevant to this. China is already getting aggressive with their policy stimulus all the way over here, and it's not even the Lunar New Year yet. So can you imagine how bullish we're going to be beyond this threshold here, moving into the future? It's going to be crazy, and I'm gonna save my commentary for a little bit later on because there's still so much stuff to cover. But we'll go back to the beginning of this one, and I will move downwards through it just in case there's anything interesting here that we want to have a look at. Bitcoin is still a maximum long position in the discretionary investment ideas framework, or the summary. And as far as updates are concerned, there is no updates really here that concern us. Maybe a little bit here. Our fundamental research summary currently implies little risk of a risk on, risk off phase transition, which is bearish over the next 0 to 6 months, and an elevated risk that outcome is going to occur in the 6 to 12 month time horizon, which I guess is kind of in line with, a little bit in line with my theory that the halving might be a sell the news event. But we will move on. Nothing in the crowding model. And looking at the VAMs for Bitcoin and Ethereum, there really isn't anything too much in here to look at. There is a tiny bit of upside. You can see how fast this top end of the range has come down for Bitcoin, and how fast that's coming down for Ethereum as well. But I'm not letting that dissuade me. Weather model hasn't changed at all. We've already discussed that. And down through here, there was a lot of data and a lot of charts showing things to do with the Chinese economy. There's been there's been some incremental increases in the China liquidity proxy. Because of all the issues with China, I think they're expecting that to continue on. So there'll be probably more bars, more blue bars beyond that, which will be bullish for cryptocurrency. And yeah, it's just talking about China, but the headline understanding is very simple, which is that it's going to go up in liquidity, not down. So let's move on to the rest of the data. Nothing there. Now, this is probably the most interesting one. I pulled this up and had a quick look at the CoinAnk liquidation maps. You can see that after we've had this pump, now everybody's piling back into their fucking long trades again, which will probably cause this to go back down again and have some sort of a correction that may or may not resolve itself in some sort of a mini head and shoulders type of thing. But this is kind of the behavior of how the market works. The spot flows are the things that are going to gradually push an asset in some direction, but the liquidations are going to define the path in the short term. Now, the price has gone up a little bit, and now everybody is horny for gains in the short term. They're thinking they're going to miss out, so they're going to go 100x leverage long, and they're going to cause all types of issues. Okay, that's shocking. I didn't know that. So there's there's a massive imbalance here between the Ethereum and Bitcoin liquidation maps. Isn't that funny? that it would happen at this level, around this zone somewhere. Fascinating. Because a liquidation map showing Ethereum to the upside and Bitcoin to the downside would be bullish on this ratio. And what did I tell you in a previous one? I mean, it's a little bit lower than that now. I was expecting it to reverse a little bit higher than that, but that kind of area here kind of looks like an area of support or like resistance on the ratio that turned into maybe support. Anyway, move on. Have a look at Solana. Fucking hell. It's not good. And what about Doge? Oh, yes. Good. Okay. Let's have a look to see if the 30-day confirms or denies. Doesn't really have strong bias there. Ethereum up. Okay. All right. Now let's have a look at tactical sentiment. We'll see if Bitcoin is still at its all-time lows. Holy shit. Yes, it is. Excellent to see. Very happy with that. Ethereum is still quite low as well. So, whoop. Oh, and Doge is almost back to the middle of its range. Has it actually gone up? No, it hasn't really done shit. Interesting. So maybe lower on Doge, but fuck. Bitcoin is oversold as fuck. Still very, very oversold. Cool to see. What was the last update here? 25th. Somebody told me that this hadn't been updated yet and that the actual Centix sentiment measure had gone down and had reset to its midline. I saw that yesterday. This website is not being updated apparently, so I might need to start logging onto Centix, the actual platform, and updating it manually, which will be a pain in the ass, but if that's what it takes, that's all right. So I'm not going to use this one. Apparently it's reset to the center line, which I think is fucking awesome. Would be nice to see that go a little bit further down, perhaps below its midline, to kind of bring it more in line with this general trend. Like so, that would be lovely, but failing that, that's okay. Now let's have a look at the short-term metric. Short-term realized profit and loss. As we saw yesterday, the metric is at the zero line, like over here, which is basically what I expected because it is the same behavior that we experienced over here and the same approximate behavior that we experienced over here as well. And yes, I do believe we are in this phase of the bull market. This is the phase that I believe we're in. Saw somebody in the chat channels today saying, how long until the bull market starts? Bro, it's already here, man. It's already fucking here. It's been here for a year already. How long has it been? It's been more than a year. Anyway, so MVRV, short-term MVRV, very close to zero there. I would like to see that come down a bit further because I don't quite think that it's worthy of this. But there it didn't really touch. It's still quite a long way there. I would like to see that kind of come down a little bit more. But if China really does front load this stimulus, then there's no reason to say why it couldn't just sustain that level a little bit higher than normal. It's just, that it would be just like 10% or maybe 20% more healthy if it could just come down and touch that midline like so. That's okay. It'll be what it is. The inter-exchange flow pulse update from yesterday, no major update really that you can see. It's still declining at quite a significant rate. This may indicate that we have a bit more time to go on this consolidation, which would be a little bit annoying because we need to take into account two kind of factors, which is, okay, we have monetary stimulus out here in the economy somewhere. Generally, the factors are going to be bullish, but at the same time, the inter-exchange flow pulse is suggesting more consolidation. And what will that look like? Especially if I'm of the belief that it doesn't go below the realized profit and loss line, or the short-term realized profit and loss holders line. So that potentially means that we're going to fill this triangle here in some regard. That price is going to languish in here for a while, accumulating. I mean, that would make sense, wouldn't it? Okay, so second order consequences. Let's zoom in a little bit more. Zoom in a little bit more so I can fully express my bias here, and I'll make it clear. Okay, so what compels big breakouts? Liquidations. And what generates liquidation clustering? Ranges. So the intra-exchange flow pulse is saying that we need to consolidate, and the short-term realized profit and loss is saying that we're basically at the bottom, meaning that we're not going to go below this, or if we did, it's going to be very, very hard to do. So maybe run it sideways for the next 2 weeks, build up a whole shitload of liquidations right here, leading in to this fucking Chinese Lunar New Year. And as it starts to come up through this zone, it gains those liquidations and it gains that momentum and it sends it. And that is the thing that sends it. That would be cool, because at that point, you may have the inter-exchange flow pulse. You may have enough time to flip it positive again after a reset of the MVRV, short-term MVRV, and a reset of the short-term realized profit and loss. Then all of the metrics would be in coherence, and you would have your positive liquidity stimulus coming out from China in coherence with whatever liquidity is being provided by the US Federal Reserve, them running down of that reverse repo facility. So there's a scenario where you have your cake and you can eat it too, and you have a whole bunch of everything. And yes, the Capriol BTC heater, typical, still consolidating, still chilling out there. You never know, you might see this even rise a little bit, but it probably won't go below this magic line. If it did, I would be very sad, but I wouldn't be too disheartened. Right, meme line is still going up. Cool. Google Trends hasn't been updated. Yes, and good to see. We can see that there is slightly positive breadth in the small caps and the major caps that I had in the previous tab here, which, as I covered yesterday, is somewhat of a global sentiment effect in itself. You will not see positive breadth in small caps unless there is a risk on sentiment. Risk on sentiment generally only happens when there is either Goldilocks or high liquidity. Either one, crypto generally goes up. So it's good to see. Yes, tactical sentiment is low, which suggests to me that we are closer to the bottom than we are at the top. And now I've got a couple of tweets to go through here that might be hilarious. A lot of people are going to experience utter tier 10 horror if crypto recovers from here and leaves them sidelined. This is true. I can sit back and watch my portfolio go to literal zero and be fine. I would stay up at night for years from watching crypto zoom to the moon after years of watching without me knowing I possibly lost potentially 9 figures in gains just to avoid a bit of risk. Yeah, and that's the fact about crypto investing that I hope is very clear to you all, is that you can only lose 100%, but you can gain multiples. And this massive skewness is so fucking huge. Like, you can't get access to skewness like this within any other asset class. Skewness is the reason why I am here doing what I'm doing. Never forget that, and I've said this so many times, I'm not in cryptocurrency because I don't know how to invest and trade in commodities or stocks. I could do fine in both of those markets, but cryptocurrency is the market with the most unfair advantages to our benefit, provided that we approach it correctly and don't approach the activity like gambling degenerates. We can take advantage of that skewness, the unfairness of having only 100% downside risk, but like 100, 200, 300, 500 fucking 1000% gains on the upside. Like, where the fuck else are you going to get odds like that from? You cannot. And we have all of the data in our favor. We know what drives the market. Here, I mean, think of all the people in the world looking at cryptocurrency and how few people really, really look at liquidity. It's absolutely baffling. Anyway. Timothy Peterson, he's got the lowest price forwards trend, which is an interesting metric that it's not really like based upon anything other than technical trends, but I kind of like it as a general heuristic of where the floor price of Bitcoin should be over the very, very long term. And the fact that this is a lot higher, like the margin of where he estimates the floor price to be, and it's so far above current price, that's cool to me. I think that's very, very cool. A couple of tweets here from Michael Howell. Not sure how to interpret them. He says a decent liquidity start to 2024. So the last update that we had from Cross Border Capital, I'm pretty sure, might open this in a new tab so I can zoom in even further. Pretty sure that the last update we had from Cross Border Capital, Okay, pretty sure the last update was this one here. And this was released today, but I'm not 100% sure because I would suspect that that information would have been released in a Capital Wars letter, of which there are no new ones. So I'm a little bit uncertain here whether that is a revision of the previous one or what the fuck is going on. But whatever it is, that's good. I'm happy with that. Doesn't bother me at all. I mean, it's great news. I mean, that is exactly what we want. We want positive going up. Number go up. Great thread. I stand by the thought that QT formally ends around the second quarter. Laurie Logan emphasized that bank reserves are a key target variable and small bank liquidity remains low. No accidents in election year means either bills keep coming or QT is stopped. Else kapow. Correct. They won't do anything that will threaten the economy. So yeah. Actually, I might pull that up. I can't live without knowing. By the way, I know that there was a newsletter there from Capital Wars talking about the yield curve. In this letter here, there's nothing that I could find that was relevant to us. I could talk to you about how there was a guy in the Ask Adam channel yesterday telling me about the yield curve and how I was shallow and narrow-minded for not taking into consideration the yield curve. If he's watching this right now, no offense, or you said with respect to me, and I'm saying this with respect to you as well, but after reading this, I can't take any discussion about the yield curve seriously. Like, Michael Howell's going into like mega autistic detail about how the yield curve is fundamentally broken and there's no real information being held within it because of the manipulation due to central banks. So I'm just going to disregard that entire argument regarding yield curves and how to use it to like judge the incentives for liquidity and shit. I think that your comprehension of my understanding of liquidity may not, like, maybe you haven't spent enough time around me yet to understand like what I know about liquidity and about economics and central banking and stuff. I can assure you that my knowledge is quite substantial on that subject, and I don't really express it. Like, my understanding of what it is a lot higher than what I can probably express. So when I'm talking about liquidity, I do know a fair bit, but there are, of course, my limits. If I'm comparing myself against Michael Howell, then I'm going to be left short in a shortfall. So let's compare. Let's compare here. 3-month annualized change. So the previous number was at 12%. And we are now at 15%. I have to confirm this just to be absolutely fucking certain. Yeah. Okay. So we have had an increase in the 3-month rate of change. Excellent. Cool. That's good. Cool. So that's probably the most important single part of this entire investing analysis today is that we've had an update on the weekly global growth and liquidity. That this here is probably the reason why we had the pump in today's numbers for cryptocurrency. Yet another incremental piece of evidence that suggests to me that this correction is substantially over, and that is it. And if anything, I think that any lack of drawdown in this market will probably end up resolving itself in an excessively large drawdown post halving. Wherever we end up post halving, when everyone is spruiking, oh yeah, the halving and all this type of shit. That the Fed air gap that Michael Howell described, if it reveals itself anywhere around here, that would just be hilarious because everyone will be like maximum long by that point, and it'll be time to run it back all the way to the bottom of the Barham model. Run it all the way back. Get yourself your 50% fucking drawdown. Everyone say, oh, it was an early cycle, and it's all done. But all the metrics, none of your aggregate valuation metrics went into high value here. I bet that's how it resolves itself. Anyway, that is still several months away, and we don't really need to worry about that at the moment. We need to concentrate on what's happening here and now, which is, as of this most recent weekly 3-month annualized rate of change, up, which is good, which will lead us, likely, with relative strength into the Chinese Lunar New Year, have that stimulus front-loaded, dump all of that money into the market, run crypto up, make some money. Fucking good times. Good times. All right. Now, I think that's all I want to talk about. And that's all I want to talk about. So, thank you very much for your time today, everybody. And I hope you have a lovely long weekend here if you're in Australia. Happy Australia Day to all my Australians. And all my strength and fucking respect to the Americans out there who are defending your southern border. What the fuck is going on out there? Anyway, not to get too political, but yes, defend your country. This is a war against fucking globalism, and this is the globalists versus the nationalists. Need to defend your borders, defend your values. Anyway, love you guys. Talk to you tomorrow.